Hello everyone and welcome back to the podcast. I decided to do a deep dive on Okta because I believe this company is looking somewhat like Palantir 2 years ago. I also believe that the AI revolution is happening quicker than most people believe, and therefore that is motivating me to accelerate my pace of work. So let's get deep into Okta, and I'm going to explain in depth why I believe this company is a bit like Palantir 2 years ago. The summary of this deep dive is that the proliferation of AI agents will likely unlock exponential growth for Okta, and that Okta is positioned to become a foundational platform in the AI economy. Here's why. Okta is a potential instance of the Nvidia algorithm whereby a sudden technological shift has non-zero odds of exponentiating the company's earning power. I explained this concept in my last Palantir update. Okta has been focused on identity management for 17 years now, and now that AI agents are set to multiply the workforce, Okta's revenue per customer may increase non-linearly, with costs staying relatively flat. Trading at just 5.5 times sales, the market is not discounting this possibility, in my view, generating the potential for an asymmetric return. Okta creates software that helps companies manage the identities of their employees and customers in the cloud. Identity management is a forklift upgrade in that it usually requires modifying a company's entire IT system, and this is what has kept Okta back from exponential growth. Companies are slow to change, and thus acquiring new customers is hard. However, as AI continues to proliferate, a large percentage of a company's workforce and clients will be increasingly AI agents. This will do two things. One, multiply the number of identities existing Okta customers have to manage, and two, make Okta's product even more critical, since to manage the identity of AI agents, you need an AI-powered tool in the first place. That is something that humans cannot do. Although Okta has been in the identity management business for nearly 2 decades now, it only launched Okta AI in Q3 fiscal year 2024. That is roughly a year ago. Okta AI works much like CrowdStrike's XDR engine, which you can go and refer to my original CrowdStrike deep dive to learn in depth about that. In that, it is constantly generating data and using it to train AI models to get better at detecting threats. It simply logs users out automatically when it detects potentially malicious activity. This infrastructure promises to create a strong moat, whereby the more data Okta has, the better its AI models get over time. In turn, this will likely drive higher customer retention levels and more upsells, which will yield more data, better models, and so forth. CrowdStrike is a perfect example of how an ever-improving AI engine then allows novel features to be created and sold at a marginal cost, further increasing operating leverage. This has been the main driver behind CrowdStrike's rapidly rising cash from operations that you can see depicted in the graph below. Over time, the variety of problems associated with AI agents will likely grow exponentially too. This will not only further increase Okta's revenue per customer, but enhance Okta's proprietary data advantage. Having an exponentially growing problem set on an exponentially growing base of AI agents means that every linear step Okta is ahead of the competition will translate into a non-linear increment in its ability to train superior AI models. In case you haven't seen my last Palantir video, the Nvidia algorithm is an operational pattern that I teach in my Tech Stock Goldmine course that explains some of the most astounding corporate successes of this decade, like Nvidia and Palantir. When a company invests decades into developing a technology that significantly enhances humanity's ability to process information or harness energy, a sudden technological breakthrough can trigger exponential growth that seems to emerge unexpectedly. The core force behind this growth is the relentless increase in demand for computational power and energy in the modern world. Regardless of the label we use, whether AI, data science, or something else, the need for computation continues to rise at an exponential rate. In the graph below, you can see a highly simplified depiction of the Nvidia algorithm, where the two dependent variables are essentially a fundamental tech that's been built out over a number of decades, and that creates a strong moat because it's hard to replicate, and then a sudden technological shift which makes distribution much easier and explodes the number of end applications, increasing margins and generally making the operation harder to replicate while yielding exponential growth. Whether Okta's earning power increases exponentially or not from here is a function of how solid the below two dependent variables are. My impression is that Okta has the best cloud identity management platform, and that the rise of AI agents is highly likely as well. In Q3 fiscal year 2025, half of Okta's top 10 deals came from US federal customers, which somewhat reminds me of Palantir a few years ago, before they started scaling rapidly as they are doing happening now with the onset of AIP, which is their equivalent of the sudden technological shift, which makes distribution easier, increases margins, explodes the number of end applications, etc. When I learned back in the day that Palantir's software was running the US nuclear stockpile, I understood their digital twin software was second to none. I haven't seen quite a strong signal for Okta at present, but the attraction with the US government is likely indicative of a strong competitive advantage. In the Q1 fiscal year 2023 earnings call, an analyst asked CEO and co-founder Todd McKinnon how they were planning to compete with Microsoft's recently launched Entra. The response is typical of founder-led companies that are highly focused on a single task and end up outcompeting much larger players with abundant resources. In his reply, McKinnon essentially pointed out that Microsoft didn't have the adequate level of focus on cloud identity management.
The competitive environment we're seeing hasn't changed in a number of years. I know we seem to get this question every time we chat, and we kind of give the same answer. And I think when we see competition, we see point players that don't have the breadth and scale, or we see the big platforms. And Microsoft, as you mentioned, probably has the most focus of the big platforms. They traditionally in the legacy world had the best identity franchise with Active Directory on-premise. And so they've tried to use that to force their way into cloud identity.
As AI agents proliferate and the fractality of the digital space continues to increase, cloud identity management is set to become one of the foundational layers of the economy. Identity management is the top of the funnel for any digital system on Earth because you need to access a system for the system to be useful at all, which makes it particularly attractive for large corporations as a customer lock-in mechanism. Microsoft's approach is to lock in customers as much as possible, while Okta's approach is to stay neutral. Long term, I believe that Okta's exclusive focus on cloud identity management, coupled with the neutral stance, will be a substantial competitive advantage. I do not yet have a conviction on Okta, but I plan to study the company in depth quarterly going forward. This is definitely looking a bit like Palantir a few years ago, and the odds of a powerful investment thesis arising are meaningful. Additionally, Okta's enhanced profitability despite the macroeconomic headwinds experienced in the past 2 years is indicative of process power, which makes exponential growth more likely than otherwise. Okta's financials have softened post-pandemic as a result of Okta customers not hiring as many new employees. Reading the quarterly earnings call transcripts of fiscal year 2022, so that is natural year 2021, reveals that much of Okta's growth back then came from seat expansions per customer. So their customers hiring new employees and then having to essentially buy more seats from Okta. See the remarks of CFO Brett Tigger, I hope I pronounced that well, during the Q1 fiscal year 2023 earnings call.
Our dollar-based net retention rate for the trailing 12-month period remains strong at 123%. This was driven by the strong upsell motion we are seeing with our existing customers across both Okta and Auth0 as they expand on both products and users.
As a result, dollar-based net retention for the 12 trailing months has declined since Q1 fiscal year 2023, coming in at 108% in Q3 fiscal year 2025, as you can see in the graph below. Although this is not great news, it does make sense in an environment in which companies have been firing employees to get leaner. Further, in my research, I have not come across signs of structural degradation. The decline in the retention rate seems to be driven simply by less seat expansion and by customers scrutinizing the IT budgets more than they were doing 2 years ago. Additionally, in Q3 fiscal year 2025, 15% of bookings came from new products that Okta has been releasing during this downturn. Management shared this metric in the earnings call with a celebratory tone, later clarifying that the number was quote-unquote higher than in previous quarters. A further increase in this metric over the coming quarters would serve as tangible evidence that there's nothing structurally wrong with Okta and that the lower retention rates are indeed cyclical. This will be the most important metric to watch in the short to medium term, and here's what CFO Brett Tigger said about how they expect the percentage of bookings from new products to evolve going forward.
I would actually just add the percentage is up year over year because basically last year it was just governance. And Todd just listed out like 6 products that are doing really well right out of the gate. So it's pretty easy to see that the percentage is going up and to the right, which is really exciting for us for all the reasons that Todd has said just in his last answer and what he said earlier on the prepared remarks.
Despite this macroeconomic downturn, Okta has also managed to meaningfully enhance its profitability over the past 2 years via efficiency initiatives. As you can see in the graph below, gross margin, the orange line, is now higher than it was before Q1 fiscal year 2023. In turn, cash from operations, the blue line, has skyrocketed from nearly zero in natural year 2022 to over $600 million in the 12 trailing months. That's approximately 23% of total revenue during the same period, which is fairly impressive. Should the percentage of bookings coming from new products evolve, as management indicated in the last earnings call, much of that revenue should be highly accretive to the bottom line. Indeed, the last 2 years have put Okta in a position to reap even more financial rewards from the rise of AI agents than otherwise. For reference, Spotify has converted approximately 12% of its revenue to cash from operations in the 12 trailing months. Spotify is an organization with extraordinary process power, as evidenced by the rising increase in profitability as well. Okta's numbers currently point to a company with considerable process power, and this property makes it all the more likely that Okta will be able to capitalize on the AI agent opportunity ahead. This is because, as evidenced by my deep dives on Netflix, Costco, Amazon, Spotify, and Palantir, companies with extraordinary process power tend to successfully increase shareholder value over time, far beyond expectations and oftentimes against all odds. This is one of the main things I teach students of my Tech Stock Goldmine course, which is linked to in the show's footnotes, and is one of the most powerful components of the mental framework behind my successful multi-bagger investments. Further, I believe Okta's relatively timid valuation is the result of the market not being sure about the aforementioned cyclicality, together with the focus on net income versus cash from operations. As you can see in the graph below, net income is still in the negative territory despite inflecting upwards since late 2021. As I have explained previously, a company that has a negative net income but produces positive cash from operations does not actually lose money. As you can see in the graph on the screen now, revenue, which is the orange line, has also grown tremendously fast since 2017. As previously explained, Okta has two main operations: employee and customer identity management. Okta only launched the latter in January 2024, so that is Q1 fiscal year 2025, and just 2 quarters later, the customer business is at a $1 billion annual revenue run rate. This suggests that Okta's ability to deploy new verticals and upsell its customers is notable, which in turn is also suggestive of extraordinary process power. Thus, the improved financial performance is not only the result of cutting costs, but also of simultaneously delivering more value to customers. To me, this scenario points to competent management. The recent security incident Okta experienced in October 2023 enabled me to see how co-founder and CEO Todd McKinnon thinks about managing the company. Okta started out focusing on making moving to the cloud easy for customers, and over time, it's had to evolve into a cybersecurity company as they and their customers have been increasingly attacked by cyber criminals. After the aforementioned incident, which has had no tangible impact on the financials, McKinnon came up with a plan called Bedrock to ensure Okta becomes one of the most secure companies in the world over time. The main components of this plan are a bottoms-up approach that enables the best ideas to make their way into the products, and a culture that makes security the #1 priority for everyone in the company. The latter component, culture, proves McKinnon understands the importance of culture in the pursuit of maximizing corporate value over time. As you may know by now, the culture of a company broadly determines its fate.
When you think about executing well, it's can be pretty straightforward. It's like you have to make sure you have a clear vision. We want to be one of the most secure companies in the world. You got to set clear priority and get the right amount of resources on it. And that kind of sets up this cultural component to be successful.
In conclusion, I believe that Okta is a highly asymmetric thesis in the making. Identity management is a crucial component of the AI-driven economy, and Okta has been cutting its teeth for nearly 2 decades now, and the recent efficiency gains poise the company to meaningfully capitalize on the rise of AI agents. It looks like Okta's earning power will increase non-linearly in the coming years, with no obvious limit in sight as the number of AI agents and the problems they cause grow exponentially. Their focus on identity management over 2 decades is already an appealing barrier to entry. However, as they move down the path of managing AI agents, their platform promises to yield a proprietary data moat/flywheel similar to that of CrowdStrike's at present. The key enabler of CrowdStrike's data advantage have been a lighter agent and a quicker time to value every quarter. Per his remarks in the Q3 fiscal year 2025 earnings call, McKinnon perfectly understands that this is the path to success.
And I think the governance market is like that. There's a lot of shelfware, a lot of the stuff is not implemented. And our product, which is very strongly integrated to access management, it's very quick to implement. People get tremendous value out of it fast. It's well integrated to many SaaS applications, and more, it's integrated to even on-prem applications as we innovate there. And it's fast time to value. And I think that, in this case, is the winning formula, and we're seeing it play out in the market.
Going forward, I will continue tracking Okta over time to more deeply understand the competitive positioning of its offerings and its ability to confer the aforementioned data advantage via its recently launched Okta AI module. However, in my view, the company's execution in the past 2 years points to notable process power, which makes exponential earning power growth more likely than not as AI continues to progress. Okay, so that's it for today. As always, if you enjoyed this, could you please share it with one friend? I would really appreciate it because these deep dives are for free, and so the only way this grows is with your help. Thank you very much. Take care, and until next time.